Per usual, everything on this channel is for educational purposes only and is not intended as financial advice. So I'm going to talk about ETH and BTC today, and if you want to see how I'm trading that in a provable way, you can bounce on over to Enzyme. I'll leave the link in the description below. This is our fund, Techemy Capital. I am the clicker. I'm the person making the decisions here. You can see virtually anything transparency-wise, when I'm making the trades, where, as well as kind of who's depositing and when, which is interesting as well. All that's there. Fees as well, 2 and 20, basic stuff. So if you want to copy trade me, counter trade me, or just are curious what I'm doing in a non-leveraged way, this is spot positions here. You can check this out. So I keep saying we're in the bottom of the 7th inning if it's baseball, which is a metaphor for 9 innings total. I think we're in the bottom of the 7th inning with 2 outs now. If we look at the look into Bitcoin charts, this is kind of my quick barometer, this chart specifically. How much more do we have in the tank? So based on the 4 previous examples of bubble type stuff, when we break above this 2-year MA multiplier, so it's the 2-year moving average times 5, when we break above that, we have 3 to 4 weeks, maybe 5, before we break below. So it's very important to pay attention to where that is right now, which is at 65K. We're currently, somewhere around 59, 60 right now. So once this gets above that level, we are in late stages. Now that doesn't mean we can't go to 100K, we can't go to 5 million. You know, it doesn't tell you where it thinks price is going to go. It tells you how overbought we are for X duration. So maybe we break the mold here and we go for 65 weeks above the 2-year MA multiplier. I don't think that's the case. I don't think it's going to be different this time. It's just math. That's all it is. It's percentages. You know, we're talking about people being up life-changing amounts of money. USD, you can say fiat is trash. You know, all that stuff is fine. But when it comes down to trading it, it's a different animal. And this has been a very good surrogate for market tolerance of overbought conditions. So 65 or above thereabouts is 3 to 4 weeks of end times bull market territory, most likely. Let's say you're not satisfied with that. Let's add another parameter here. Let's look at the 200-week moving average. And this shows us the percent increase of the 200-week moving average. So if the 200-week moving average is moving up very quick, it'll be in the yellow-red colors. We're currently in the green to yellow. So we are in the latter stages of what is tolerated by the market as far as bubble top. You can look at this and say, okay, the past 3 times this has happened, we've had 3 different weeks or whatever, 3 different prints as far as a top telling you be careful. Plenty of time here. Be careful, 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 right? It doesn't say this is going to be the top. It says be careful up here because the market doesn't historically tolerate this as far as how quickly things are moving. You don't like that? Fine. Let's look at the Puel. The Puel says, what is the notional value now versus the past 365 days of coin issued? So this is a minor metric, basically. And again, backtesting, the past 4 all-time highs or local highs or whatever you want to think of them as have all been when the Puel multiple has been above 4 and it's even tapped 10 a couple times. It's another barometer for how overbought are we? Are we at 6? Are we at 4? Are we below 4? Do we have some room? Are we above 3? We're above 3 right now. We're at about 3.2. That's been moving around here. You can see how it's looked previously. And for me, all this is very simple. You know, if this gets overbought, if 200 week gets overbought, if we're 3 weeks into the MA multiplier, I'm going to be, very strongly selling there. If we look at stock to flow, we are outperforming stock to flow. The best meme that ever could meme, and the top end for stock to flow is May around 84K. As far as the model is concerned, historically we've actually blown past that by quite a bit. You can also look at days into next halving as far as how far out we are from halving and while at the same time topping. You know, you can watch those colors. It's basically, 800 days-ish from halving is when we've topped out. Something else to consider there. Pi cycle, this one's been just laser sniping tops 3 times in a row. So look at all these charts in aggregate and tell yourself, okay, you got to be honest with yourself, right? If I'm trying to do my best at figuring out where the top is here, doesn't necessarily mean shorting. It just means moving out of spot realistically. Maybe even sell 50% and keep the rest. Say whatever, I don't want to pay taxes on the rest, right? I'm just going to sell 50% because all these indicators say historically we're probably at a top. We're not there yet, but that's why I'm looking at this stuff every couple weeks with you, the viewers. Like and subscribe if you're not subscribed. So far no cross on the Pi cycle, but it's coming. It'll be slow like last time. I think, how long did this take last time? December, kind of 2 or 3 months. Basically it was all of Q4 it took until it finally crossed. So we got all of Q2 maybe until this actually crosses. Log growth curves, I know these are adjusted sort of after the fact, a little hindsight sort of thing. But if we look at like historically where the top could be, we're talking 101 currently, and that'll move up every couple days. But I think everybody is looking at 100 at this point in time. It's hard to not imagine that. You know, it's kind of a magnet for everybody. It's a psychological level. Everybody who's anybody is probably looking at that level as far as where they want to sell or thereabouts. MVRV, similar to the Puel, basically says how much is the market valued relative to how much is actually moving on chain. And when this imbalance increases dramatically, we have, again, local tops in price, fairly obvious, anything above 7.5, peaks around 9, another metric for overbought, oversold. So, you know, all these tools are for free at your disposal. So you can't have any excuses when you sell too early, you sell too late. That's what these tools are here for. This is what technical analysis is all about. Looking at some on-chain stuff, this is the HODL wave, which maps out when the coins last moved. And anything in the red here is moved relatively soonish to that date versus coins up here, which haven't moved in over 10 years. So this chunk continues to get bigger. These are probably coins that are just gone forever at this point if they haven't moved in 10 years. But again, historically, if I'm looking at local highs, all-time highs in price, what stands out to you, right? These peaks in the orange and yellow. What does that represent? That represents coins that have moved between 1 to 3 months and 3 to 6 months. So the tolerance for the market is basically if a ton of coins are moving, you know, to me this represents sellers, holders converting to sellers. If we see a lot of on-chain activity relative to older coins versus newer coins, then to me that says, okay, a lot of people are converting this to cash at this point. There's a lot of on-chain activity. Do I think any of that's going to change with corporations and custody and treasuries? And no, I don't think anything's going to be different this time. You can shame me in a couple of years if that's not the case, but I don't think anything's going to change. So again, the tolerance for all-time highs versus UTXO age is basically when the 1 to 3 month reaches over 15%. Currently we're cruising at 15% or slightly over. So we're getting close. We're getting super close. Again, another metric. You know, if you don't like any of these individually, just use them in aggregate or don't use them at all. But I think collectively they're all very powerful as far as signals are concerned. If we look at technicals again, the 200-day moving average yearly pivots, volume RSI, and there's this curious little rising wedge we're building to 100K. So that'll be quite something if we bear div to 100K. Now, I don't know how realistic that is, but when I see higher highs in price, lower highs in RSI, lower highs in volume, I get a little concerned at highs up here because it just tells me that there's very little momentum, exuberance to buy stuff up here. And if this thing crashes to zero or crashes out of this, you know, I like the 200-day moving average at 30, basically all the way back down to the base of this rising wedge. We got all these yearly pivots to contend with on the way up. You know, can we bear div through the R4, through the R5? That's what you got to ask yourself, along with everything else I just showed you as far as on-chain and technicals are concerned. So this volume profile doesn't look as dire as ETH does. ETH USD volume profile looks atrociously bad because it's just straight down. There's just nobody excited. Nobody excited to buy ETH right now. I'll get to that in a minute, but zoomed out, you can see how this is just declining here. Not something you want to see generally. Not something I'm looking for at all-time highs, certainly. Maybe you can say that notional value is more important here than total coin. I don't know. You can try to rationalize this, I guess, but there's a very clear rise in volume and fall in volume. Here's the pitchfork. 3 points are here, and median line is here. The 200-day moving average is now above the median line. So the buy zone, if you're just trading this pitchfork, you're selling anything around 73, and that'll continue to move up. and you're buying anything in the blue zone between 28 and 35 basically, and then that would be a great trade. That's a 50% drawdown plus at this point. That's what the pitchfork is there for, to tell you again how overbought or oversold are we relative to the rate of change over the past X days, and this is since 2019. If you look at the 20-week SMA, compare this to every single bubble we've ever had, every single bear market we've ever had, typically we bounce at or below this level during any trend. We've yet to do so really other than mid-2020. The duration at which we've spent above the 20-week SMA is now the longest or close to the longest ever. You can point to maybe this in here, but we really don't, 200 days without a touch of the 20-week is something. We're about at 165, I think, right now. But this is another metric you can use. Where is this going to pull back? If this is really going to keep going, I like 35 based on this. I like 35 based on this. I like 35 or 38 based on yearly pivots. You can use all this together to look at that and say, where are my levels that I want to buy versus levels that I want to sell? I mean, that's why we're all here, right? If we pop on the cloud of the 20-week SMA, again, historically, we've tapped the Kijun on the weekly, which we haven't done so since the cross. So we are due. We are overdue for a touch of that. That's currently at 35. So let's say all this tumbles tomorrow. I'll be looking at 35 rather strongly. Daily cloud, just textbook. We've never had a clean trend like we've had here based on the cloud. It's never been this clean. Sometimes there's a little noise. Sometimes there's a little cross-recross action. It says breakout, Tenkin bounce, add here on the Kijun bounces, add here again on the Kijun bounces. Right now the Kijun's at 45. So this isn't going to tell you where it thinks price is going to go. It just tells you the health of the trend. And so far, so good. Cloud is getting rather thick. As the cloud gets thick, the potential for a bearish reversal trade, edge-to-edge trade sets up, say from 49 to 39 or something like that. But we're not there yet, obviously. Quite far away from that, but that's something you got to consider. Again, if this goes south. Giant decision tree. How bullish are we? How bearish are we? How overbought are we? All that stuff you got to take into consideration. So trend looks fine. Rebuys at 45 currently. Cloud says everything looks okay. If we look at the 2017 bull run, you can see what I mean by just messy. Like this is still tradable signal wise, but you can see how we rode the Kijun, dumped it below the rode the Tenkin, dumped below the Kijun, cross recross, cross recross, cross recross, cross recross. All those signals are tradable, but nothing has looked as clean as this does. This is impressive. It's impressing me, certainly, and I've used this since 2013. So all that looks great. If we want to use a slightly faster trend indicator, we can look at the alligator fractal stuff. And when these cross bullish, that's your entry signal, your initial entry, and then you're adding on any fractal break to the upside with a stop loss at the opposite fractal. So right now you've got this setup telling you to add at any all-time highs, basically, which is a no-brainer. It's generally always going to tell you to add at those levels. And it tells you it's got a stop loss at 46 based on this trend system. Crypto moves a little fast for the high speed moving averages. So I like to move it down a little bit just to get a slightly better signals. As long as the back testing looks okay, these should still work out. So once again, it's telling you to add. This is the 12-hour, by the way. It's telling you to add at 62, anything at all-time highs. And then your current stop loss for any active longs is at 55. But again, you can see where it tells you to get in, get out. This was the previous stop loss level on this trade. So all this still looks good on the 12-hour as far as signals are concerned. Let's switch gears to ETH. ETH is a bit more of a toss-up. It certainly looks more overbought in some ways than BTC does. EIP-1559 is coming, and there are a bunch of smaller mining pools, from what I can tell, that are opposing it. A bunch of bigger ones that are in support of it. It's weird to see Antpool, BTC, and .com and Via BTC in support of it because they are basically the devil incarnate related to SegWit and Bcash and all the other stuff. So if they're in support of this, I'm a bit worried for EIP 1559. I don't really know what their angle is there, but I assume they have some angle there. These other pools I haven't really heard of, honestly. I'm sure the ETH miners have, but I haven't. But it's definitely contentious, which makes sense. I mean, you're cutting their paycheck by a large amount. Here are transaction fees versus the block reward for ETH, and February was obviously an insane month for the miners, as was January. January was an all-time high in total fees. February was another all-time high in total fees, as well as all-time high in transaction fees. March probably isn't going to eclipse those levels, but it might come close to January. At the end of the day, for me, in order for ETH to succeed, fees just have to come down by probably 50% or more to make sense as far as the DeFi ecosystem. If we look at what got ETH to where the price was in the previous all-time high, it was people participating in the system, right? People using the world computer to do stuff, ICO-related stuff. This cycle was very much DeFi-related stuff, and that kind of fell off significantly when fees went way up. So we got to see fees come down if we want to be bullish on ETH, if we want to be honest about that. So EIP-1559 isn't necessarily going to help that directly, but it's part of the pump my bags narrative that the ETH people are all focused on. Certainly, if we look at the bank and we look at total value locked, I like the bank over DeFi Pulse because they show you the stuff that's double counted. And to see ETH continue to rise in the DeFi ecosystem, continuing to get deposited into the DeFi ecosystem, this is what you want to see if you're bullish. And yeah, you can use DeFi related stuff to short ETH, but at the end of the day, you're locking ETH up, and that's all I really care about. If we look at the USD total value locked, you can see the 28% duplicate ratio it gives you here. So it's not really 65 billion, rather, it's more like 46 billion. So it's definitely a lot. It's just not as crazy as it might look on DeFi Pulse. And back to EIP-1559, this is my favorite piece of propaganda lately regarding this, that it's going to be better. It's going to be a better purchase than BTC. I love that. Good for them for thinking of this sort of angle and framing. We'll see. That's really all it comes down to for me with ETH. We'll see what happens when it happens, because we don't really know. It might be on the testnet, might be on somebody's back of the napkin math calculation, but until it's on the network and active, then we'll know what we don't know yet. If we look at ETH's 2-year MA multiplier, it also tapped the top of the multiplier and bounced basically to the median line. Right now, the top of this is around 2350. Not a lot of data historically on backtesting, but this doesn't really like spending time above, aside from 2017. But it really doesn't have a lot of data to really take this super seriously. But obviously it's getting close at any higher highs in price here currently. If you look at that 20-week moving average, again, same story. It's been very strong as far as a trend determiner and bouncing where it should be bouncing, above or below. We were kind of hugging the 20-week for a while in mid-2020 and then blasted off. So currently it's around 1200, which is basically the previous all-time high retest. I certainly like that level if things go super south. The 200-day moving average is now above 1,000, which is great. I like any rebuys in this fuzzy area here. Here's that ETH volume, which just looks atrociously bad. To me, this just says we are shoving this into the closet farther and farther until the closet's going to explode back out at us, and this is going to retest the 200. I have no doubt in my mind. Sometime this year, it will retest the 200. It hasn't done so since the breakout, really. So it's good for ETH that the 200 is so close to the daily, but it's hard to think that this is going to explode even more, despite exploding as much as it has since March. Really, the only thing that can get it there is EIP-1559. I think if enough people buy into the propaganda of this is a better buy than BTC, and if enough corporate treasuries get on board there, then sure, we can go to infinity. But right now, this is looking more overbought than it does on BTC. You can see it supported here on like the maximum pitchfork diag. Yearly pivots at 2100 and 2600, and then after that it's who knows what. But this definitely looks more overbought than BTC, and the volume looks worse for sure. ETH's daily cloud has been pretty clean since March as well. You had this recross here, and go time, Kijun bounce, Kijun bounce, Kijun bounce, and upcoming stuff I'd be watching for is the potential of a bearish TK cross, which would tell you to get out of your longs. And then at that point, you'd be looking for this cross recross situation. If we get a TK recross above the cloud, then that is an all-in situation based on cloud signals. Alternatively, you'd be watching for the edge-to-edge trade again from 16 to 12, basically. So again, that 1200 number looks good based on technicals here. Alternatively, you're watching for a cup and handle potentially here with projections basically to that R5 area to the upside. Here's a 12-hour alligator fractal. Current stop loss at 17, telling you to add at 1944. Trend-wise, it looks fine. Everything had its inverted head and shoulders that it's broken out from on lower time frames. So overall, ETH still looks good, but it's a bit weird that it hasn't hit price discovery again, although BTC has. And if you look at ETH BTC, try to get some discernible metric on the 20-week SMA. It hasn't really, the 20-week SMA hasn't performed really well as far as showing you what the trend is. I mean, look how noisy this is, right? Since 2020, it's just been all over the place. So I don't trade this directly because I think it's too much of a mess, but it's definitely worth taking into consideration. If you think EIP-1559 is going to be the best thing since sliced bread, then you're probably wanting to long the ever-living crap out of this with the assumption that this goes to 05 plus 01 potentially. Now let's say this goes to new all-time highs and ETH flippins BTC or something crazy like that. This is probably near the time at which you need to make that decision for maximum risk reward because of EIP-1559 or some fundamental metric that's changing, adjusting the monetary policy. You know, like if you're a buyer of that concept, I think you have to be a buyer of ETH is going to outperform BTC regardless of how it looks on the USD pair. So that's all I have for this one. Like, dislike, comment, share, subscribe, hit me up on Twitter, and happy trading.